I'm Bridget Stomberg.
And I'm Lisa D. Simone.
And this is Taxes for the Masses.
Today's episode is on the many changes to individual tax deductions brought about by OB3.
OB3, passed in July 2025, introduced a host of changes to individual tax deductions, including above-the-line and below-the-line deductions. In today's episode, we highlight many of these changes. Hello, Lisa.
Hello, B.
I think it's safe to say that we are in our OB3 era.
I don't remember that being one of the eras that Taylor Swift referenced on her tour.
Did you watch the documentary?
I did not.
Okay.
So she did, and I just missed it. She has the OB3 era.
No. I just was asking if you watched the docuseries. It was good. I cried every episode. It was great. But no, she was not in her OB3 era at all. But we are.
Okay.
We were in our TCJ era. We were singing songs about international tax reform, lower corporate tax rates, and now we're in our OB3 era. And I'm not sure what the theme, I'm not sure what costume we're wearing in this OB3 era.
Okay, so I agree that a key theme of TCJA was major international tax overhaul. Mm-hmm. So thinking what the theme would be, what the costume would be for OB3.
All I had was it was a bunch of extenders, and so is it like us and hair extensions? Is that...
Ooh, and like fake nails and fake eyelashes?
Yes, just everything's getting longer, going on longer.
Okay, like our nose hairs.
Maybe not that.
Ear hair?
I'm with you with stick with head hair and nails and lashes.
All right.
Because everybody loves a good fake lash, or I love a good fake lash.
Okay, sure.
All right, let's go with that then.
Any way you slice it, there were a lot of tax provisions buried in OB3. We did a general overview of the act in late summer. We've talked specifically about tips, small business stock, and we're going to have a whole episode on the corporate alternative minimum tax and the R&D mix-up. And today we're talking about changes that OB3 made to tax deductions for individuals.
Correct. So today is all about individual taxes, so I'm going to struggle through it.
Lovely. I love this.
Goal number 1. To provide a nice little refresher on the different types or buckets of tax deductions that exist for individuals, which I know is near and dear to your heart. Mm-hmm. Then we're going to dive into specific changes to all 3 types of those deductions.
Ooh.
And so to kick us off, because I know you had a lot of practice teaching this to your students at UT this year, your grad students.
Yes.
Let's have you kick it off with talking to us about the difference between above the line and below the line deductions. And don't just say that one is above the line and one is below the line. Not acceptable.
Okay. It might be helpful to think of the tax return kind of like an income statement.
Yeah.
So we start at the very top with gross income, which is defined very broadly as any income that you receive, unless specifically excluded by the law as being not taxable. Mm-hmm. So gross income is things like wages, gambling winnings, interest from your bank accounts, dividends, proceeds from the sale of an asset or gains rather, prizes that you win, lottery, whatever.
All of it. Diamonds that you find lying on the ground.
Absolutely.
Yes.
From that, we subtract a first set of deductions, and these are the above-the-line deductions. You subtract the above-the-line deductions to get to adjusted gross income.
Okay, so let's start by trying to simplify it and say that above the line deductions you might think of as adjustments to your gross income.
Sure.
That gets you to your adjusted gross income.
Okay.
That sounds nice. It sounds lovely.
Sure. So through 2024, examples of the above the line deductions included things like alimony payments, student loan interest deductions, contributions to retirement accounts that are traditional in flavor, like your IRA or your 401k, 403b, thrift savings, whatever.
Okay.
All of these above the line deductions.
Sounds great.
From there, once we get to adjusted gross income, we subtract below the line deductions, and this is where things get fun.
I'm already having fun.
I can tell. Mm-hmm. Below the line deductions come in 2 forms. There's the standard deduction or itemized deductions.
Yes.
Standard deduction is a set amount based on your filing status, and almost everybody gets to claim it. Itemized deductions include things like medical expenses above a certain threshold, mortgage interest, state and local taxes, certain charitable contributions, things like that. So you can calculate all of your itemized deductions, you add them up, and then you take whichever one is bigger, the standard deduction or your itemized deductions. But neither of those below the line deductions that you can claim affect the above the line deductions that you can claim. Two different things.
Two totally different things. So in 2025, the standard deduction was almost $16,000 if you were a single filer. And like you just said, if that amount was larger than all of your itemized deductions combined, then you would subtract that standard deduction amount from your AGI to get your taxable income. If your itemized deductions were bigger, you would subtract that from your AGI to get to your taxable income. So the line is AGI.
Yes.
There's a bunch of deductions above that
Above
that are
it.
used to compute it.
Yep.
There are a bunch of deductions below that that you subtract from it to get to taxable income.
Well said.
Thank you.
And I'll just take a moment here to interject. The first change from OB3 that we can discuss today relates to the standard deduction.
A type of below-the-line deduction.
Excellent. The TCJA increased the amounts to be about double what they were before, and OB3 made that increase permanent.
Yes.
That means that now about 90% of taxpayers claim the standard deduction instead of itemizing.
Okay, so here's, I think, the obvious question.
Tell me.
Why? Why do we have this convoluted system of deductions? Why do we have above the line, below the line? Why do we have two different types of below the line? Why aren't all deductions just subtracted from gross income to get to taxable income? Why do we have to have this AGI line at all?
Yeah, that's fair. As far as I can understand, this adjusted gross income concept, or AGI, which forces the split between above the line and below the line deductions, it came about sometime in the 1940s to create an intermediate measure of income that can be used to determine whether you qualify for other tax benefits.
I'm going to need you to say more things, please.
Okay, so some below the line deductions and some tax credits are limited based on your AGI so that people with higher AGIs don't benefit as much.
Okay, I think I'm getting there. So some of your below-the-line deductions are going to be affected by your AGI, which are affected by above-the-line deductions.
Yep.
Okay, so let's start at the top. What did OB3 do to above-the-line deductions?
Well, first, there's now an above-the-line deduction for up to $25,000 of qualified tip income.
Yep.
So go check out our episode on that topic for more details. Second, there's a new above-the-line deduction of up to $25,000 for qualified overtime compensation, which we discussed on our first OB3 episode.
Yep.
There's also a new above-the-line deduction for interest paid on new cars assembled in the U.S. That deduction's up to $10,000, but phases out for higher income individuals.
Okay, no.
No?
No, you just said that AGI exists so that it could be used to phase out below the line deductions and credits. So now it seems like you're trying to tell me that we use AGI to also phase out deductions that go into AGI?
I am not just trying to tell you that. I am telling you that.
Okay, what?
Yeah, clear as mud. Yep. This is why people love individual taxes so much.
Me included.
Okay, so recall that the TCJA massively increased the standard deduction, and OB3 made that increase permanent.
Okay.
So if we made these new deductions below the line, it's possible that individuals wouldn't benefit from them because they don't itemize. Making these new deductions above the line allows more people to potentially qualify, and if we tie it to your income level, then we're still, making sure that it's not just the higher income people that take them.
Through some pretty convoluted math, I would think.
Uh-huh.
Okay. That's lovely. Anything else?
There's also a new above-the-line deduction of up to $2,000 for contributions to charitable organizations.
We had this during COVID, yes?
We did. It was similar. It was smaller. It maxed out at $600.
Oh, okay.
So OB3 increases the deduction, but the contribution has to be made in cash and can't be made to a donor-advised fund, which we also have an episode on. And taxpayers can't claim both the above-the-line deduction and a below-the-line deduction for charitable contributions. They're two different things, and you have to pick one.
Can I just say something?
Yeah.
I can't believe that you actually like this stuff.
I loves it. I loves it, Precious.
Somebody has to. All right, we talked about above the line and below the line deductions and changes that OB3 made to above the line deductions. So now let's move on to below the line deductions, and more specifically itemized below the line deductions, because we already talked about the standard deduction. And we already said that as of recently, only about 10% of taxpayers even bother with itemized below the line deductions anymore.
Yep. So let's keep it rolling on those charitable contributions.
Okay.
OB3 introduced a new floor. So charitable donations below 0.5% of your AGI are no longer deductible as an itemized deduction.
I'm really trying here, but even I'm starting to hate taxes at the moment. Okay, so above the line, below the line, and now we've got floors.
And ceilings.
It is truly, this is obnoxious.
It is intricate, it's nuanced, it's complex.
I like that. That's a lovely way to spin this crap soup dumpster fire. Continue.
Starting in 2026, only charitable contributions above 0.5% of AGI are deductible. So that basically means that earners who itemize have to clear a hurdle before they get any tax benefit from giving. So here's a planning tip.
Ooh, okay.
Now that we're in 2026, great tip to take advantage of. Make your deductions in 2025.
Oftentimes we have students come to us and it's some sob story about something that happened, and we had a former dean who used to say, first, build a time machine.
Yes.
So
first, build a time machine, go back to 2025 and take your deductions then.
Okay.
Also, this is an example of why above the line deductions are generally considered more valuable than below the line deductions.
Okay, I think I understand what you're talking about. I remember Casey Schwab had examples about this in his class materials, but I think I'm going to need you to give me an example, please.
You got it. Let's say your AGI is $250,000. The first $1,250 of charitable contributions you make are not going to be deductible as an itemized deduction below the line. None of it. But let's say you have an above the line deduction that lowers your AGI to $200,000. Now it's only the first $1,000 of contributions that are not deductible. So not only did that $50,000 above the line deduction lower your AGI by $50,000, it allowed you to increase your below the line deductions by $250 to further reduce your taxable income, kind of like magic.
It's nauseating, and listeners, my co-host was not going to sell me out here, but I actually did the math wrong in this example, which is just another reason why I should not be doing anybody's individual tax return, because not only do I not understand the tax, I don't understand the math. Okay, so basically what you're saying is that for itemizers, every dollar of above the line deductions is almost like a double win.
Yes, when you can do the math, yes.
Moving on. OB3 permanently lowered the amount of home mortgage interest deduction that taxpayers can claim. The Tax Cuts and Jobs Act previously lowered the max from interest on $1 million of debt to $750,000 of debt, and OB3 makes that lower principal amount permanent. So what that means, I think, if I did the math right, is that if you have $2 million of home mortgage debt, you can only deduct interest payment on the first $750,000, and readers, I did not do the math right. The excess is non-deductible.
That is correct. Okay, so now we gotta talk about the political hot potato that is salt. And now I'm craving potato chips.
I was gonna say, you just made a joke about salt and potatoes.
Yeah,
that was solid.
Recall that the TCJA limited the salt deduction to $10,000 per return, so there was a marriage tax penalty baked in.
Ah, yes.
OB3 temporarily increases the cap to $40,000 for the next 5 years.
That's nice.
At least for those not making more than $500,000 of modified adjusted gross income.
Oh my God.
Yeah, don't even talk to me about Magi. Above $500,000 of Magi, it phases back down to $10,000 by $600,000 of Magi.
Isn't a Magi a Star Wars thing? A Bible thing? Aren't there Magi?
It's like a fantasy thing, right?
Something.
I don't know. I don't remember it in Star Wars.
It's something. Anyway, we'll
it's
cut
a thing.
That. Okay, so from $10,000 to $40,000, that is a big increase, and I imagine it could actually push more individuals back into itemizing.
See, you do know a lot about individual taxes.
Not by choice. Time for the good, the bad, and the ugly. And I'll start with some good because I'm going to run out pretty quickly here. I think it's good that we now have some certainty around the permanently enhanced standard deduction, which is going to be almost $32,000 for those who are married filing jointly.
Yeah, I think having some permanency around these things is good. I also really like the above the line deduction for charitable contributions.
Me too.
Because a lot of people, 90% of taxpayers up to this point recently, haven't been allowed to take a deduction for charitable contributions because they don't itemize. So I liked it during COVID.
Same.
And I like it now.
And it's bigger, which is great.
Yeah, it's even bigger.
Okay. Bad. We've talked about this a little bit before, but some of those new above the line deductions for tips and qualified overtime, they are temporary. They're carve outs. They're politically motivated. If I was channeling Oprah, it would be no tax on tips for you and no tax on overtime for you. No tax on car loan interest. But only through 2028, and it's complex and it's complicated, and yeah, not my favorite.
Yeah, I really don't like the complexity of these. Also, the no tax on tips language is just flat out wrong. There's definitely other taxes on tips and many taxpayers who won't be able to claim the deduction because they make too much or whatever. So I just don't like that at all.
I don't like it either, and you can correct me if I'm wrong, because I'm probably wrong, but when I think about where the complexity of deductions lies, I tend to think more below the line.
Yeah, I agree.
And so I don't love it when we're putting more complexity above the line, because then you're forcing people who maybe otherwise wouldn't have had to engage a tax expert or use the software to use it to make sure that they get the benefit that they're entitled to.
Yeah.
It's not my favorite.
Same. I also don't like that the SALT cap is temporary.
No.
It goes back to $10,000 in 2030, and I think it's also more complex than it was. That the cap has increased to 40,000, but only if you make less than 500,000, and that's then there's a phase out, and that's a whole complicated thing. So
phase outs make me want to take a nap.
Sure.
But as we talked about before, it's not going back to 10,000 in 2030 because we're just going to find a way to extend it.
For sure.
Ugly.
I wonder how much these tax breaks cost us, given that we're an expensive country. We spend a lot. We're very spendy country.
We're high maintenance.
We're very high maintenance.
So funny you should ask, because by some estimates, OB3 could add $3 trillion to the deficit over the next decade, $3.8 trillion if we include interest payments. And that's in total. That's like the whole bill. More directly to your point, the Bipartisan Policy Center estimates that just the increase in the standard deduction, making that permanent and it's indexed for inflation, that adds $1.4 trillion alone.
Yikes.
All the other new deductions that we talked about are about $881 billion. So it's expensive.
It's expensive. And is it worth it?
It's an interesting question. And what I always wonder is given how expensive it is it going to the people who it was supposed to go to?
Yeah.
Time will tell.
Time will tell. Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.